Hello guys, welcome back to Look Your Trader. So today we're going to look at this article. So Ray Dalio has published some of thought on the Fed cut for the upcoming Fed cut, and today I would like to read the whole article, and then I will put a little bit of my comments on his thought. So okay, Dalio sees quarter point Fed cut as right thing for creditors. So he said half point move would help mortgage borrowers. Question over size of cut won't make difference in long run. Bridgewater Associates founder Ray Dalio said the overall picture of the U.S. economy probably warrants a smaller interest rate cut by the Federal Reserve this week. The Fed has to keep interest rates high enough to satisfy creditors that they are going to get a real return without having them so high that the debtors have a problem. Dalio told Bloomberg television correspondent Halinsta Emin in an interview in Singapore on Wednesday. Whether it's a 25 or basis 20 or 50 basis point, 25 basis point would be the right thing to do if you look at the whole picture. Dalio said on the sidelines of the American Institute Asia Summit 2024. If you look at the mortgage situation, which is worse, and that affects more people, that's probably to 50 basis point. The Fed is widely expected to lower interest rates later Wednesday after holding borrowing costs at a two-decade high for more than a year. Investors and forecasters are split over whether you will cut by a quarter percentage point or a half point, as officials seek to bring the economy to a soft landing. But Dalio said that what the Fed does this week doesn't make a difference over the long term. I think it's such a silly bet, 25 to 50 or 50. He said policymakers will ultimately need to keep real interest rate low to enable the servicing of mounting debts, he added. Dalio isn't the only financial luminary to express ambivalence about the Fed policy. J. Morgan Chase and Co. Chief Executive Officer Jamie Dimon said whether the central bank cut rates by 25 or 50 basis point, the move is not going to be earth-shattering. They need to do it, Dimon said at a conference on Tuesday. But it's a major thing when the Fed raising rate and lowering rates because underneath then there is real economy. Okay, so overall I have three thoughts. First of all, I totally agree with what Ray Dalio had been saying. Okay, so who am I? I'm just a small hedge fund manager, or just say a dumb YouTuber who very occasionally upload videos from time to time. But I seriously agree what Ray Dalio's comment on the upcoming Fed cut. And the Wall Street is trying to portray the upcoming quarter point Fed cut as the only solution from heaven to save the economy. And you see some like mainstream media, financial institutions saying that okay, 50, you have a 50 basis point cut, and how is that going to help the economy? It looks like the Fed, because we were talking about this for a long time. We talked about this. We talked about high delinquency rate of debt. We talked about huge amount of debt in the U.S. economy system. We also talked about student loan. We talked about how high inflation and higher interest rate environment will end up damaging the fundamental of U.S. economy. But then this happened. We see labor market weakening. We see a lot of recession signals, taking place. So we see mainstream media flashing light and telling us if we have a 50 basis point cut or maybe a 100 basis point cut, these wouldn't be a problem. And then what? We are still seeing more recession signals. We're seeing student loans having problem. We're seeing, like BLS releasing job data, but that was and later revised 818,000. Okay, that was a huge number. All right, you cannot make a slight mistake just by overprint that labor number. So that's crazy. It's like it's faking the number, guys. So this is what the Democrat have been doing, contributing to the U.S. economy system. They try to fuel lies, and they feed you with more lies. They lied about, Joe Biden's health condition. They lied about, his consistency becoming the U.S. president, and now they are lying about the job data and economy figures. They are lying about the BLS data. They are lying about the fact that like like illegal immigrants are taking over the local Americans' job, so they wouldn't tell you the truth. So once they're seeing, okay, you have a bit, back signals, maybe CPI gone up a little bit, maybe CPI is becoming more resilient, and maybe the job market has weakening. So we have to lower rates just in case, okay, just in case. So we are cutting rates to prevent a upcoming recessions, making it sound like, like so very posh, sound like a cliche, sound like they're doing one of hell of a job for the world economy. I mean, look at all these nonsense. All right, we are now having an interest rate environment trading at 5.25 basis point. 5.25% of interest rate to 5.5%. Right, we are here. Right, it took us nearly a year to raise the interest rate to a point where we have nearly like 5 6 interest rate environment. And now, if you're cutting these down, you're aggressively cutting rates by 100 basis point. That you're forcing the economy back to where 4%, but it's still higher interest rate compared to the QE phase, right? Back in the QE, phase, we had great time. All the assets are just coming, like all the assets keep going up. Like people are happy because their 401k, their asset keep improving, right? The value of their assets keep climbing. So everyone's happy. But as a matter of fact, you see like, people who are not actively trading American stock or holding American stocks, these people we are talking about, like humble workers, we're talking about people doing humble jobs, working in restaurants, maybe doing all these, public servicing. They are not necessarily related to finance sector or technology sector. These people are being left over, right? These people are not enjoying all these amazing 401k. These people are not enjoying, these people do not own house, they do not own stocks. So technically speaking, when the president's talking about how the S&P is creating a new high, these people are not making a single dime for themselves. So you cannot equalize, you cannot like just say if the stock markets keep climbing and that means a good and strong economic fundamental. That is essentially wrong. And second, I would like to address that I do agree with like Ray Dalio to see like if a quarter point rate cut, it would be kind of helping to ease out the pressure out of mortgage payers. But the problem is how much. If these we're talking about people who would like to buy house by paying for houses. These people are paying like 5 to 6% of mortgage rate, really crazy mortgage rate, and these people are paying same amount of rate for their student loan. So by cutting a quarter point would create an anticipation or expectation of the interest rate. You have a rate cutting kind of phase. Maybe potentially the banks will give you a better deal compare with the mortgage rate right now. But that is not, like that's not going to be the game changer because the fundamentals still going to be weak. People are still paying for the interest rate. People are still having less cash to spend because of the inflation, right? Because everything is so expensive, people now have less money to spend. Even though some people may claim they are making money out of American stocks, but these are just, you can only withdraw this money when it comes out, when you have to sell the stocks to get the cash. So the point would be if one day people are short in cash, people do not have liquidity, people would be forced to sell their stocks or forced to sell their houses to meet their cash requirement on daily basis because they no longer have cash. The revenue of the companies keep shrinking. You see more recession signals coming, and you see all these bad economic signal, worsening economic fundamentals, and therefore you're going to see less cash injected to the economy system. So that's what's basically gone wrong in the U.S. economy system right now. Okay, that's a big problem. So I don't think quarter point Fed cut would be a big game changer. Okay, so the last thing is I do not see a quarter point Fed cut is the right thing for creditors. So I would, agree to some disagree, and also I will keep some of the room open because I think from my point of view that I think if the Fed would remain the interest rate much higher, let's just say 8% or maybe 9%, what you're going to see is you're going to see a reset on asset price. You're going to see a recession, but then you're going to see if the government has done right, it could be a good, beautiful deleveraging process. So once it is done, I think it would easier for the U.S. economy to really reboost for another economy cycle. So it would be a good thing. It would be painful in the short run, but it will be much beneficial in the longer run. So I guess that's the case. So that's why I'm always a strong supporter of having a rate higher for longer. So from my opinion, from my point of view, I do not think that having a rate cut so early, so urgent, would be helpful for creditors or for the U.S. economy fundamentals. And I do not see this is the ultimate method or the game changer that could change or to prevent the recession from coming. What we're probably going to see by the end of this year is that the mainstream media is going to blame Donald Trump. They are going to blame the elections. They are going to blame everything about elections, about creating this volatility that slamming the market, making the market so vulnerable, right? So they will stop talking about recession and all things. They will blame it all on the upcoming election by the end of this year. And we're probably going to see huge market correction from this on. So thank you guys for watching. If you like my video, please subscribe, and you can leave the comment below, or you can choose to join our international investor community. So thank you for watching. I'll see you in the next one. Goodbye.